One of the things that matters in this environment is enthusiasm and sentiment. And you have a lot of individuals, retail traders with an app that's in their hand, and they are buying these kind of stocks. If you look at the ownership of several of the companies in the tech space, I mean, it started with Zoom in March and Peloton and Novavax, and, we can go through the list. But there's an enthusiasm in the retail world about owning stocks that have an exciting platform. I wonder whether they could describe the distinction between these different companies, or even, frankly, if I can tell you a lot about the differences. But it's what's going up that matters, and you buy it on your app, and it trades higher, and it can be 50 to 60% of all trades in one day. But the other fact that you've brought up, which is really important, Scott, is that in an environment where you have a November up 11%. I mean, 11% is incredible. We had one other month this year that was up over 10%. April, you have to go back to 1991 to find a better month. And if you look at what happens after that kind of big month, I mean, logic would say, well, it's got to go down. I mean, they're going to test some lows. There's going to be correction. We've got a little chart that Vinny put together that shows that in the times over the last 30 years when the market has gone up 7% or more, there's 20 data points, 18 of which have 6 months to look forward to see what happened after that sharp month. It shows the average is up 6.4%. So because the market has gone up doesn't mean that enthusiasm wanes or that sentiment starts to fall off. We have fundamentals, we have stimulus, we have low interest rates, we've got a weak dollar. That's going to help U.S. companies, and the savings rate has gone to 14%. People are going to start to spend more money, despite the fact that we're in a pandemic, a recession, and hospitals are full.